Welcome everyone to the next edition of the Care Home PR and Marketing Podcast. My name is Adam James of Spring Up PR, and today we have Anthony Rae of Montane Care, who's going to be talking with me about everything you need to know about selling your care operator. Now, there's going to be some great information in this episode: how to value and appraise your care operator, whether you're a single home or whether you're a group. What's the market like right now? That's something we might be looking at, I'm sure. And what do you need to plan if you are thinking of selling your care operator? And what pitfalls to avoid in this whole process? So today on this episode. However, before we get going, as always, please make sure you share and subscribe and like and recommend this episode, as it helps to let other people know about all the great information that's shared on this podcast. But before we get going in earnest, if you would like a free video on the 7 vital and proven PR and marketing things you must be doing in order to get more inquiries to fill your beds faster, head over to springup-pr.com. That's springup-pr.com/UK, and there you will see a copy of where you can get that free video. And we are just talking when we are doing this episode, which is March 24th. That's right. It's kind of an interesting time as the vaccination is moving ahead. So now more than ever is a time when you move to thinking about promoting your homes. So without any further ado, let's get straight into the episode. Anthony, thank you so much for being here. So why don't you start by telling everyone a little bit more about who you are and what you do?
Good morning, Adam. Thank you very much. Yes, my name is Anthony Rae from Montane Care. I specialise in the sale and acquisition of care homes ranging from nursing, residential, specialist care, mental health, acquired brain injury. I've been in the business for just over 20 years now. It feels a shorter time, but it is 20 years. And I must admit the last year has been particularly interesting with COVID-19.
It certainly has. Well, let's get straight into the dirt. Now, how do you value your care operator, or whether it be a home or a group of homes? How do you value it?
Yeah, that's very, very straight. Well, we are in strange times now with COVID, as I originally said. Normally, if I was to receive a call from a care operator asking me to appraise their business, to assess the value of their business and the saleability of that business, I would normally jump in my car, go and visit them under a guise of being a banker or someone else, just so we're not giving the game away. I have once turned up as a builder before with a toolbox because they needed work doing, so that was interesting. But it's all changed now. We're now on Zooms and other IT ways of speaking to each other on virtual meetings. So the first thing I'll do is actually speak to the owner of that particular business and look at the desire of that owner to sell and what their main reasons are behind that, because we have found that some sellers are looking to sell for reasons that they don't necessarily need to sell. As much as I'm in the game to earn commission, sometimes your advice is actually to say it's not ready to sell yet, or that perhaps there's other options available to you. So we try and provide the best advice possible within that. So what I would do first is have a nice chat on a Zoom call and get to know the operator, the owner of the business, and look at their desire to sell. Then what I will do is behind the scenes, of course, I would look at the CQC ratings. So I'd look at the CQC rating of that particular business. And of course, from my point of view, if it's a CQC of outstanding good, then we have an asset that is able to be sold pretty easily, readily available to the open market. When we have requires improvement, I still have buyers at the moment that are able to look at acquiring a requires improvement, but many banks at the moment will not offer funding for a home that requires improvement.
Okay.
So then I will look at individuals with proven cash, basically, in order to actually look at that business. So that's the first one, is CQC rating. Next thing I would look at, Adam, is the demographics. Look at the supply and demand for that area. Look at the occupancy of that business for the last 2 or 3 years. And has there been a steady dip within the business? Is this why the owners are willing to sell? Or actually, could it be vice versa, that we've actually seen a very good supply and demand for this particular service, and with this home there may be room to expand, add on additional rooms, day space, possibly daycare, and this could actually increase the price.
Yeah, I see. And tell me about these reasons for selling. What for you is a good indicator, and what for you is a warning sign, is a red flag?
A retirement sale is always a good sale, most definitely. But if it's a retirement sale, it's normally a business that's been built up over many, many years with compassion from the owners.
Right.
We tend to find that they bought the business. The wife was possibly, or the lady was an RGN, husband a builder. They bought this business. He's been doing the maintenance. She's been running the business. And it's the main focus is being care, not on paperwork, not CQC, not additional bureaucracy. It's being care. And unfortunately, the way the world is developing, there are a lot more forms to fill in at the moment. And a lot of owners are saying, look, we came into the business to offer care. This is more of a corporate operational, possibly at that particular point. So it's my job to then guide that person in order to sell their business. So a good seller is certainly a retirement sale, or it could be a group of care homes, such as we have at the moment, that are just looking to diversify. There's many, many reasons. Of course, if occupancy has dropped, or if CQC is a requires improvement, or even in like an inadequate, then we have to seriously look at how we can advise. I've got a requires improvement at the moment on a couple of businesses, and we've helped them get one of their homes back into a green, into a good, and then the second one is due to have an inspection shortly. I think it will become a good as well, and then we're ready for sale.
Yeah,
we could start the marketing now and start charging fees, but there's no point, Adam. You know, we want to make sure that the business is ready for sale. We don't wish to waste anybody's time.
Yeah, I see. Okay, so imagine then you've got, say, someone you've had that, you've understood the motivation. Let's say they are a good CQC. Your initial reaction is a good one. What then do you look at in terms of the numbers, the finances? What are the figures that you'll be looking at? The accounts, for example. What are you looking for to see?
Yes, for the accounts, we are looking for consistency. So we will, when you're operating a business, whether it be a care home, a baker's, whatever it is, your accounts are normally working for you as the operator of that particular business. When you come to sell, those accounts during a period of time really need to be role reversed in order to show more profit on the bottom line. So this is where sometimes we will appraise a business and say, look, we don't think it's ready yet, give it another year, swap those accounts around, let's create a better net and adjusted net figure for your business, which in turn, of course, will be a multiple of X, and there is your sale price figure.
Yeah.
So last 3 years accounts, we're looking at consistent turnover. We're looking at staffing as well. We have seen during the COVID period, of course, a lot of bank staffing coming in, particularly on nursing, and that has pushed up staffing costs at the moment, most definitely. So we want to see consistency in staffing. We have seen a lot of capital expenditure on care homes as well, to make the home safe for COVID and for visiting relatives, i.e. putting a pod in the back garden, or perhaps even, I've seen on a couple of my instructions here that we have actually vacated one of the rooms and actually created a bit of a visiting centre. So the bed occupancy will go down, but we've got a decent room there that we can self-isolate and allow residents to be visited by their family.
Yeah, I see. Great. And in terms of these numbers, the profit and evaluation, putting a guideline figure of how much an operator is worth. What's the formula? Very generically.
Yeah, the formula. I hate to say, Adam, it isn't rocket science. This part of the business
Yeah.
is not rocket science. I will always sit with a client or do a Zoom call and actually go through their accounts on the day that we receive those, and I will look at the net figure, and then I will create an adjusted net figure. I'll look at things such as motor expenses. So, is there a minibus that's part of this business? Are there any airbags that we can put there? Are there any family wages that we need to add back in? And of course, if it's an owner operator, are they taking a wage from the wages, or are they taking from the profit at the end of the year?
Yeah.
And I need to calculate whether we need a manager and what I need to add back in. And eventually I will come to the adjusted net figure. Once I have that adjusted net figure, we then look at a multiple
adjusted
of that.
profit. Adjusted net profit.
Adjusted net profit.
Yeah. Okay.
Yes, that's right. And once I have that figure, it's normally around a 6 or 7 multiple, an average care home, if I can put that in loose brackets of that figure, to actually create an asking price for that business.
Yeah, I see. All right. So just in terms of an example, then, what if you're having a home or 2 homes? I don't know. Let's imagine they're making profits, let's say 300, 400,000 a year. You times that by 5. So 5, for example, would be 2 million valuation on a £400,000 profit. Very roughly. Is that about right?
Yes. Very, very similar to that. To give you an idea, I have one with management accounts to December 19. The turnover there is just over 937,000. We have an adjusted net profit of just over 400,000, which is at 43%. That is exceptional. You would normally see 34, 36% adjusted net profit.
Yeah.
Or even less on some at 26. And then you would normally, you see, Adam, the multiple of that adjusted net profit is based on the home itself. It's based on its day space, its layout, its ensuite facilities, its CQC rating.
Yes.
It's whether, as the banks say, is it future proof? Because the banks want to lend on something that is going to continue for many years. And this is what we need to look at. But going back to your figures, you may look at it as a 6, 7 multiple. I have one at the moment that's a 9 multiple. So it really depends.
Yeah.
It really depends on
I see.
the condition.
And what about the bigger operators on 20 homes? They may be having 20 plus, something like that, or what is
Adam, I'd love one of those instructions. Yes, 20 homes plus on a big group like that. Yes, that's very, very nice. But to give you an idea, we have just recently put under offer a group of six homes at the moment, and yes, the multiple did increase slightly, most definitely.
I see. All right, great. When you look at these profit margins, which is obviously key, might you be making suggestions for particular providers once you see those accounts and that profit, or what might be the scenario?
Yes.
What might make your eyes open and think, okay, I need to give some advice here before you go to sale?
Well, the accounts are pretty standard, as I said. We're looking for consistency that the current registered manager is making a success of the business, that another operator can come in and still a year later, hopefully, still show the same turnover and adjusted net figures. Of course, there's going to be alterations to it, because when I appraise a business, if I can just go into that a little bit on this, Adam, and when I appraise and we talk about this, we look at the ensuite facilities, we look at whether the business owner, as I mentioned previously, is actually the owner operator, because we've noticed that with CQC, and particularly with the banks will look at this in fine detail and actually look at how that business operator is running the business. it's a bit like a pub. Your name is above the door. And if they've been there for 20, 25 years, maybe even longer, they've built up such a reputation and know everybody within the local authority that's placed in the business, with the banks and everybody, that the banks themselves acting for the purchaser will look at that and go, actually, the reason why it's making such good money at the moment is purely down to the manager, we feel, and the reputation that goes with that manager. If that manager is going to be leaving, i.e. if it's an owner operator, they will look at a slightly lower multiple of the adjusted net profit, or they will look at the profit that I've sort of assumed, and will actually make that a little bit less and say, no, we don't agree. You're not going to be making 40% profit. We feel that this business should be making 32% or 26%, whatever it's going to be. So we have to look at that most definitely. Yeah. And as you mentioned previously, if it's part of a larger group, then, and it's a single asset from that group, you've got an area manager that has been looking after that manager on a single asset. Is that manager able to operate without the help of an area manager? And it's small things like that that we need to look at in more finer detail, most definitely. This is why we tend to have slightly longer handover periods now, where, going back to the good old days, as they say, you used to have your seller that used to complete, throw the keys in the air and walk down the driveway, and the ingoing owner caught the keys and off they went, and there wasn't even a handover. These days, it's not written in the contract, but it's certainly shown to the banks that this previous owner will stay on for maybe 3 months or even 6 months and do a lovely handover period and allow the new manager to come in and look at the systems that the current business is running.
Yeah, I see. This is fantastic. Very, 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 very interesting. Thank you. Okay, so let's imagine then that the appraisals happened, the homes are ready to go onto the market. So what do operators need to think about in terms of making sure that they get, as best offers or as possible, that as many potential buyers are seeing their details about their home? What do they need to be thinking about?
Confidentiality. Confidentiality is one of the biggest issues in selling a business. If you're selling maybe offices, commercial space, etc., you're able to show photos, you're able to give addresses even of where the businesses are. In healthcare, everything has to be confidential. So we purposely explain to the clients that the first set of sales particulars, as we have 2 sets, will only have bullet points with no reference at all to the business, to the owners, and it will only have an approximate location, because I will be liaising with the seller. Information such as, and I put a little list here just so we got it there, an energy performance certificate. You by law, you must have an energy performance certificate for selling. As we've mentioned historically, the accounts, we would look at the last 3 years' accounts. And if there's any management accounts, particularly if it's over 4 or 5 months, let's look at that in order to show the banks. We would have a list of residents with no names, of course, but showing, because businesses are very, very different. And it's unfortunate that in residential care, life expectancy of residents will not be as long as adults with learning disability, where adults with learning disability, I've got a home at the moment, and there's residents in there, been in there for 20, 25 years. So we try and show this information and what the fee is, what is the breakdown of private fees and your local authority fees. We would also show a staff rota, no names, of course, of the staff, but showing exactly how the staff are utilized, because an ingoing purchaser might say, actually, we feel we need another member of staff ourselves. Particularly if it's an owner operator, they tend to do way and above what they should be doing anyway. And that will have a reflection on the costs on that adjusted net profit. We would look at floor plans. And of course, hopefully, they might have planning permission to extend that current home as well. So we would look at those details as well. So we've got all that information together.
Yeah.
We are dealing with our client. And then, as I mentioned before, if you are the manager, be prepared to have a long handover as well, in order to either train as a new manager or different ways of adapting that business to go into maybe a corporate operation. I have one at the moment. It's owner operator, husband and wife team, and I have a corporate operator that will be bringing in a new manager, and we're going to have a handover period for approximately 6 months. They're happy to do that because it's been their business for 35 years, and their residents, this is in learning disability, their residents have become family. They want to make sure it's handed over properly.
And what for care operators listening, and they're thinking, well, I need to know that the best chances of potential purchasers are seeing details of my operator. What do they need to do, or how can they be assured? What are the best channels? I mean, how are people getting to hear about operators that are for sale? Is it national? Is it local? How do care operators know that the buyers, potential buyers, are going to be seeing the details of their operator?
Yes. Appreciate what you're saying there. Many companies such as Montane operate differently. At Montane, we make sure that every single person that inquires about a business signs a non-disclosure agreement form. That's on our website. It's there for electronic signature. There's no printing. It's very, very simple. So we make sure a non-disclosure is sent. Once that's been done, we actually have a database of buyers from around on our system here. And also, of course, we have our LinkedIn. So on our LinkedIn, between myself and Scott Murcott of Montane Finance and David Booth, we have approximately 5,000 members in total on LinkedIn. Right, and what I have is a monthly property list. So the property list is very bespoke, and this is how the buyers are going to see the business, because the list is sent out, again, just bullet points and an approximate location, north, south, east, west. It's as simple as that. Then once I get that inquiry from that particular purchaser, I will then ask Montane Finance to actually speak to that purchaser. There's no point going down the road of introducing a purchaser that can't afford the home to buy. This isn't, we're not into tire kicking, as they used to say, or like residential homes. You go in and go, this is nice, can I afford it? This is a complete role reversal now. So I will speak to our sellers. I will advise them, who is this person that's looking at your business? How many care homes do they operate? What is their current turnover? What is their CQC? Because if they have a few homes and a couple of the homes are possibly requires improvement, the banks will ask them to get their own house in order before they look at buying another one.
Yeah, I see. And I'm curious here then, so if purely residential side, if anyone has, I know it's completely different, but I'm thinking here, if anyone has a residential home, i.e. like a family home, it always would go on Rightmove, for example, or, a similar site such as that. Is there, for the care sector, is there like a go-to place where all purchasers will be keeping their eye on? Again, whether it's a single home or a group, is to keep an absolute like every any care home that's on the market is going to be there. Is there such a place?
There are some websites. There are a couple of financial advising firms, basically, that have their own websites, and they will have a selection of care homes from a selection of commercial operators. But like us, if we have our own financial side, we are going to be in contention, and our homes won't be shown on that site, but we are shown on other sites as well. We also run editorials in particular care magazines as well. And of course, your general Google search. You tend to find that 9 out of 10 times we'll know the buyer already. To give you an idea, we took on a care home, which of course I can't give away the name, but I can show yourself the picture there. This very nice home here. It's based over in Manchester. That came on Thursday, Friday, and we have a Zoom call tomorrow with a potential purchaser. So again, we're not viewing the home, we're not disrupting the business, and we are then booking a Zoom call for Friday at 10 a.m. for somebody that's looking to lease the business as well.
I see.
Now, I haven't gone live with it. It's because of the list. I know who's looking, who has finance, and who's readily available.
I see.
So I always create a Zoom call.
All right, I see. So just so I understand then, so there's no kind of centralized, and when I say centralized, I mean you've got individual financial institutions that may list operators that are for sale, and probably their operators that they have a relationship with. So it really is down to the, and this, I guess this is what I'm coming to on the crunch, but the operator is when they choose who to market, evaluate and appraise and market their business, they have to think about what connections that person has with possible purchasers, and that's going to be down to their experience, their know-how, and familiarity with the sector. Is that fair to say?
Yes. I totally agree. Most definitely. It's our experience, it's our knowledge of who we know, who is currently available, who has the finance available in order to put this deal through. You know, some agents will use, a publication such as Dalton's Weekly. Well, I specialize in care. I don't specialize, in chip shops or post offices. And I wouldn't like to put a care home beside a chip shop or post office, because we're not looking at that type of buyer. We're looking at a buyer who has experience in care at the moment. First-time buyers are going to find the market very, very hard at the moment. So it's an operator who is already in care. So it's the care operators that we actually know already.
Okay. And what goes wrong in this whole process? What are the pitfalls that you come across from the beginning, from the appraisal, the valuation, to going on the market, to finding a buyer, to signing on the dotted line? What are the things that you have seen go wrong, and how to avoid those?
Yeah, I think we'll get rid of the word "go wrong." I think we'll call them challenges. Once we have a purchase, of course, all purchases will need to be registered with CQC. But before that, it comes down to finance. If I have a venture capitalist that's acquiring, or even a bank, at some point they will wish to review the occupancy levels of that home. And unfortunately, and we've just seen this on one home, COVID has ravaged a home. It really has. It's knocked, 40, I think it's 42% of the residents, unfortunately, were lost due to COVID. And this wasn't the home's fault, etc. We won't go into the details, but at the end of the day, the banks have said, well, we have to put the deal on hold now. We're not going ahead because of this. So this is one of the major pitfalls at the moment. Also, if you're selling a business as an asset, so we're not a share sale, we're not selling a limited company, so this is an asset sale. You have to register formally through CQC. Well, that process took about, on average, let's say 3 months. I'm just selling one at the moment, and we've just been advised that CQC will take 5 months now. And CQC apologized to this particular vendor and said that we are recruiting and we are doing X, Y, and Z. So, but my sale, luckily, is a cash sale. But if it was through the banks, and of course we have David Booth, ex-Allied Irish, on with us here, he turned around, and he said, well, you would be looking at having a revaluation again, because 5 months down the line, and of course we've already had the valuation. It used to be a 3-month period. The banks were happy with that. But after that, you've got an asset that's sat there and can erode away however the banks wish to do it. So you have to reassess it and speak to the valuers again. They may need to go back out to the home again. So that can be one of the pitfalls there. So CQC, occupancy, and of course from the purchaser's point of view, as long as they're keeping their homes trading well, because they could be operating well, sale be going through well, and then all of a sudden there's a requires improvement, their lenders find out that they've got requires improvement, the money can be withdrawn. There's many factors there, but we do our best in order to stay on top of this and follow it through with a fine-tooth comb. All of my sellers are contacted all on a regular basis. And it's the same with solicitors. Many sellers will say, yes, we'd like to use such a solicitor. And they've been the family solicitor, but perhaps they're not so au fait with the healthcare market and how to sell a healthcare business. And I always look at our purchasers and their solicitors and who they have recently transacted with in healthcare during the last maybe 6 months. And if they have a very good rapport with a couple of solicitors, I will give those solicitors a call.
I see.
And then if I feel comfortable, pass them, because we know that there's not going to be any ruffled feathers. It's not going to be, oh, we've done this many deals and we've done that. It's going to be a case of, hi, Mark. Yeah, brilliant. Another deal. Right. We know how we're operating. We know what our systems are. And it can save a lot of time and a lot of money.
Yeah, I see. Great. So, well, yeah, the perils of COVID are just another example. It's been one hell of a time for the care sector, as we know. So thank you for that. Now,
Yeah.
Anthony, is there anything that you've not mentioned that you feel absolutely has to be mentioned or we've not covered up to now? Is there anything you would like to add?
The only thing I'd like to add is that it is a positive marketplace at the moment. Mm-hmm. I'm very lucky to work in healthcare because I've seen, particularly during the last year, speaking to friends, family members, and purchasers, of course, and sellers alike, where we've seen a lot of negativity towards the healthcare market, particularly through the government as well, because of COVID. And now I see healthcare, and hopefully the public see healthcare as really, really positive. One of my biggest bugbears that have been for years is bed blocking at hospitals, costing £2,000-3,000 a night per hospital bed, etc. Where it's shown now that we have care operators in nursing and residential care that can cater for patients who are in hospitals, and we can release beds. It was shown as soon as they did. Okay, unfortunately, residents who they released, some of them had COVID, but it was shown that care home operators can and will continue to look after residents. So you can have rehabilitation. I'm selling a home at the moment that has a rehabilitation unit via the NHS. And this is what should be done. And we can release the beds in hospitals in order for our COVID patients, in order to progress with the operations that I understand are behind by many months indeed. You know, a lot of our care home operators at the moment, residents have all had their COVID jabs now. A lot of the staff are having their COVID jabs. I understand yesterday there was a debate whether all staff should have the COVID jabs. Well, that's still to be continued. But my clients, they offer a service second to none. And I feel so proud to be dealing with my clients who actually become personal friends as well. The recent home I just sold in Wales, you know, as soon as lockdown's finished, you know, we've arranged to meet up with our families, catch up for like a meal. You know, it is a personal service that I offer, and it's a personal service the care homes offer to their clients. That's
great, Anthony. Thank you so much. Finally, if people want to get in touch with you, how can they reach you?
Please, yes. Either email at anthony.rae, which is RAE, at montanecare.co.uk. Montane Care, of course, is on LinkedIn. And if you'd like my phone number, I can give you that as well.
Up to you, Anthony. You can give as much as you like.
Yeah, sure. I'm not here to give a hard sale. It's 07546 932 811.
So, Anthony, you've just given your mobile number to the world. Thank you for that. So,
that's fine.
Anthony, thank you. It's been a great pleasure to speak with you. And for operators listening, well, there you go. You've heard it all. Thanks very much, Anthony. Before you go, if you liked this episode, please make sure you subscribe. In that way, you will not miss out on any new episodes as they come in. And also, once again, if you are struggling to get those inquiries into your home, or you do want to make sure that you increase your revenue stream faster by filling those beds faster, then make sure you please go to get my free video on the 7 vital things you must do to fill beds faster. www.springup-pr.com/UK and click on Care Home PR.